All right, welcome everyone who is joining us to our Hispanic Heritage Foundation Investors Forum Crypto and Blockchain Charla on a day where crypto, at least Bitcoin, but other cryptocurrencies also are hitting 5-month highs. So some of the folks here are probably taking a victory lap. Let's go ahead and maybe run through some of the sort of admin details and recording details. If Alexa, if you don't mind doing that, Alexa is our star behind the scenes that has helped us put all this together. So you definitely would have received an email from her, Alexa Diaz Munoz. You want to kick us off here?
Yeah, hi everyone. Just wanted to let you know that this is going to be recorded, and Stacie, you can begin.
Wonderful. Well, thank you all for joining us at the Hispanic Heritage Foundation Investors Forum Crypto and Blockchain Charla. It's so exciting to have this event, particularly on a record-breaking day like today, and to have so many brilliant minds in this space present here. It's tremendous to see, really. It's very inspiring. And so I want you all to be able to ask questions, learn more, and really understand the role of blockchain and crypto in investments. We're not going to get too much into the actual technology, but for those who aren't too familiar with the technology and the difference between blockchain and crypto, here's one of the ways I explain it. Think of blockchain like the infrastructure that is a highway, and the crypto are the individual cars. Many makes and models, many years, many differences in purposes, right? It might just be transit for cargo. It might be transit for people, different things like that. So different uses, different types. When blockchain first started as an immutable distributed ledger, I don't know if it was really foreseen that it would one day perhaps become fiat for a country. And so we've seen tremendous disruption this past year. And now the United States is talking about a digital currency. What does that mean? What does it mean to think about crypto as an investment opportunity? And there are many different ways one can do that, and our experts here are going to talk about that today. But from a macro perspective, I would take a look at it as an uncorrelated asset, a hedge against geopolitical risk, something that is portable, potentially liquid, maybe not as liquid as cash, volatile, so maybe you can ride it to the moon, or maybe if you hodl it too long, it's not going anywhere. And what's so exciting is that there are very low barriers to entry. And we might hear today about how that could potentially democratize capital and improve equity. So we're going to start with introductions from our great panelists. I'm going to start with my screen view, who I see first, and that is Max.
Great. Well, thank you so much, Stacie, and thank you everyone for joining us today. A really exciting day to have this charla. I think it's a very fitting one. So with that, my name is Max Jungreis, and I'm the crypto lead at Plug and Play. Plug and Play is one of the world's largest seed stage investors, corporate innovation platforms, and accelerators. My background, I'm Colombian American from Central Florida, grew up between Cali, Colombia and the US. Grew up in a bilingual household, so kind of had a more global, curious view. Moved to Beijing when I was young, when I was 17 years old, to go to a local high school and live with a local family. Became proficient in Mandarin and decided to double major in international business and Chinese at the George Washington University. Went back again to China, to Tsinghua University. Out of the program, fellowship that I was doing was recruited by by China's largest domestic VC firm, Shenzhen Capital Group. In 2014, so WeChat Pay and Alipay are starting to really take off, and I start to find a real strong interest in peer-to-peer payment networks. Come back to the US and graduate in 2016, and move out to Silicon Valley in 2018 to work for a Korean blockchain company, which is now one of the technology providers for the government of Korea. Did 2 years after that at Stanford, researching central bank digital currency, and then found my way to Plug and Play, where I've been for the past 6 months. So really excited to be here. Thank you.
Great, thank you. Dylan?
Thank you, Stacie. Yeah, so I just wanted to introduce myself. I've been in crypto for over 5 years, went to Columbia undergrad, finished in 3 years, and really became an early investor then. Started in advisory when I graduated and worked on a lot of really interesting projects throughout 2017 and 2018. Ended up actually returning, I'd been to China many times, but returning to Tsinghua University for my MBA on a full scholarship. When I was there, I worked at Eigencapital, a crypto hedge fund, building out the OTC desk there, and then also built software to power the OTC desk and worked on the advisory side of that business as well as the market making desk for altcoins. Really enjoyed China. I think a lot of the future of crypto actually is going to be more in Asia, and we can kind of discuss that throughout this chat. Left mostly because of geopolitical tensions, as the trade war under Trump kind of made things harder to be an American, and then started working at Iconic Holding, a German crypto asset management firm backed by Michael Novogratz, Christian Ungermeyer, and Alan Howard. Worked on the crypto hedge fund platform there. Ended up diligencing firms, finding them, onboarding them onto the structure, doing sales for them. Also, we had an accelerator that was very successful, 96% hit rate for every single investment from pre-seed and seed had raised a Series A. And then also helped design exchange rate products that are backed by crypto, so an ETN backed by Bitcoin, and then other bespoke financial products. Ended up leaving to work at Struck Capital Crypto starting in May of this year. Struck Capital Crypto was started in 2017 with $20 million in capital, in seed capital, and then has grown substantially because the fund was actually early in mythical games, One Inch, Synthetics, Reserve, Luna Terra, Hedera Hashgraph, Algorand, and a few other names I'm sure you've heard of. So yeah, feel super excited to chat today.
Great, thank you so much, Dylan. Now we'll move on to Daniela.
Hi, everyone. Really excited to be with all of you here today. A little bit more about me. I'm from Quito, Ecuador, and I've lived in Germany, Ecuador, Brazil, the Dominican Republic, and then eventually made it to the States for college. So I went to Dartmouth up in New Hampshire and then started my career in investment research on a team that was building the first social index, so the KLD social index. Then I, after doing SRI for a bit, I hopped over to the tech space and worked in traditional tech for about 10 years. And then I've spent, the last few years trying to overturn the establishment. After having met the co-founder of a project called Ethereum at a party, and a few months later I was working for him. And so I worked on an Ethereum infrastructure team for a couple of years, and then last summer started working for the co-founders of Near Protocol. So as the head of developer ecosystem, and also most recently co-founded a project called Satori, which focuses on building the smart contracts and tech layer for NFT projects that want to do cool NFT drops. So that's been super fun. I also started the Near Grants program, which is an open source grants program that's deploying over 300 million worth of capital into upcoming companies in the Near ecosystem. So we're super excited about that. We've deployed probably a little over 10 million in the past couple months. So we're moving really, really fast. And it's been really exciting to see all of the projects coming through on the ground floor.
Great, thank you so much, Daniela. Nancy?
Thanks, Stacie. Hi, everyone. Great to see the other panelists here, and thank you so much, HHF, for organizing this event. especially during Hispanic Heritage Month. I can't think of a better way to celebrate and to learn than from the talented group here. So Nancy Torres, I am a Colombian American. So actually born in Bucaramanga, Colombia, then grew up outside of Washington, DC. I went to UNC Chapel Hill for undergrad and then moved out to Silicon Valley almost 10 years ago now. Started my career at Google, then went to Uber, and actually at Uber, was on the business development team there and did a lot of work specifically on what Uber was doing related to fintech products and partnerships for drivers and riders. And then also spent some time at IDEO in their research and design studio, where they were focused on emerging technologies, one of which was a blockchain and the applications of it across different industries. And so, back in 2017, really, as a lot of companies were thinking about what were the use cases and applications for blockchain and how would it disrupt their businesses. I went to HBS for business school, so spent some time in Boston, and then moved back out to the Bay Area. I was working in investment banking at Goldman Sachs, focused on software and internet companies, and then recently joined Ulu Ventures as a principal. So Ulu Ventures is a seed stage Silicon Valley based firm, investing out of Fund 3 right now, $138 million. And, part of our investment thesis is focused on number one, diversity, so diverse founding teams, and number two, decision analysis. So investment process that's rooted in, analytics for making decisions, and also in how we construct our portfolio. And we've invested in several blockchain startups. So invested about 10 million across 9 companies right now, and excited to share more and learn from the group today.
Great, thank you, Nancy. Roman?
Hi all, I'm Roman Leal, a managing partner of Leap Partners. We are a cross-border VC, so early stage VC that invests across the Americas. We do both US and Latin America, mostly around fintech, commerce, and SaaS. And I first got introduced to Bitcoin back in 2011 when I was part of Goldman Sachs equity research team. And so I covered the publicly traded stocks in fintech, Visa, MasterCard, Western Union, MoneyGram, these companies that had really, taken a lot of market share because they rode this secular wave of shift to digital payments. And while you saw a lot of positive trends, and if you look back in the early kind of 2000s and 2010, that decade was really the decade of those companies. They were doing very well in the stock market. But my job also as a investor analyst was to see where the potential risks of the stories were. So when I got introduced to Bitcoin and I sort of, just opposed the current payments infrastructure of, centralized, sort of rigid, very siloed versus what, the blockchain offered, which was decentralized, almost sort of easy to use, easy to validate, perhaps even more secure. I felt like this is the antithesis of what we have in the current payments ecosystem. So I wanted to dive into it. I wrote an article about it, and sort of that's how my journey began. Fast forward, I went from Goldman to PayPal. I joined in a very interesting time in PayPal's history because they were still part of eBay, and got to work with the group that was just acquired right before I got there, that had developed a digital payments hub for virtual goods. So if you were playing video games and you wanted to buy something on mobile, we kind of take it for granted now, but back then it was pretty novel. And so PayPal acqui-hired that company, and I teamed up with that company to launch what effectively was like PayPal's first efforts in integrating blockchain. So we got to integrate BitPay, Coinbase, and Goldcoin into PayPal's digital payment hub, again, very focused on virtual goods. So I got to see sort of how, on the one hand, it presented risk to certain incumbents But on the other hand, some incumbents were thinking, trying to think ahead of the pack and say, how do we start integrating and learning about this early on? Then I'm sure we'll talk more about sort of the investor mindset, but that's sort of my first introduction to Bitcoin.
Great, thank you, Roman. Lisa?
Hi, everyone. Thanks for joining today. I am Lisa Cuesta. A little bit about my background. So earlier part of my career, I was in consulting and worked on a startup before moving to Silicon Valley and joining Google. And while I was there, the first team that I joined was focused on bringing together offline and online data through products like Google Maps, Google Wallet, Google Offers. And so got to see how the payments underbelly worked back then. And then again, when I was working on the international launch of Google Play and working across all the countries where Google Play was available. I went to business school to shift to venture capital. So went to HBS, joined Next Gen Venture Partners when we were raising Fund 1 back in 2016. And while I was there, covered fintech, crypto, and digital health. So invested in companies like Republic, which has is covering a bunch of different asset classes, including crypto, and then also Carta. And while I was there, stumbled into the New York tech crypto ecosystem. So met all of the folks at Consensus, like Danny and Galaxy, and really got to go deep on crypto back in 2017. Helped organize New York City's venture community's blockchain summit. And then in 2018, NextGen actually got acquired by a large asset manager that manages over $150 billion in AUM. And I worked closely with the CIO there on figuring out their digital asset strategy. So worked both on the venture side as well as the institutional side. And then more recently, I actually decided to hop over to the operating side. So I joined Aztec Network, where I'm leading commercialization, business development. I've been here now since the beginning of the summer, so relatively new, but the team's growing super quickly. So we've hired about half the company since I joined. And we are offering scalable privacy on Ethereum. And what that means is that we, right now, if you've ever used Ethereum, everyone's transactions are completely public and everyone can see, transparently all the transactions that you've done on Etherscan, which we think really limits the use cases for what can be done on chain. And by using a technology like what Aztec is building, we can enable people like institutions, enterprises, individuals to bring more of their lives, their financial lives on chain. So super excited about what we're building. And on the side, in addition to my role at Aztec, I'm also an angel investor. So still keeping one foot in the investing world. And I'm invested in companies like Lido, Goldfinch, Thesis, Keep Network. So happy to talk about either the venture, institutional, or now operating side.
Great, thank you. Well, this is really exciting. And, why don't we segue into the institutional, well, just the different stages, right? Starting with the institutional. So Lisa, I don't know if you want to kick us off, but today there was news about the FDIC considering stablecoin insurance. Many of the investment banks now are talking about either providing a custody solution or other types of strategies focused on digital currency. And just years ago, they thought these currencies had no merit. So could you kick us off with what you're seeing in this space from the institutional perspective?
Yeah, so definitely saw that whole transition from 2017 when, tulips and all of those buzzwords were associated with the crypto conversation. And then now it feels like it's been more or less a 180 from a lot of the financial institutions. And to some extent, it feels a little bit less risky as a financial professional to say, like, I want to work on this as part of my career. But that said, I think institutions are a pretty broad category. Like there's on one end of the spectrum, you can consider like, crypto hedge funds institutions and that they're deploying in an institutional way. And on the other end of the spectrum, you have like endowments and pensions and allocators who are going to be much slower to get direct exposure. So I think it's important to kind of like segment institution in that way. But across the spectrum, you're seeing more appetite, more conversations, more like, bringing in experts to learn from them. So while I was on the institutional side, we learned from folks at, Grayscale and Fireblocks and brought in all of the kind of leading, service providers in the space to understand what their offerings are, how clients can get exposure. And I'd say generally, it feels like these conversations move a little bit slower than the crypto space would like. and a lot slower than the crypto space moves itself. And so there's a lot of patience that's required, and just like hand holding the institutions kind of through the process, educating them and meeting them where they are, which is in reality, like sometimes they're not even sure what custody solution they want to use. And they're still talking about Bitcoin and not even thinking about like Ethereum and some of the other ecosystems that are vibrant and growing really rapidly. So it's a process, but I think in the near term, what it means is there's going to be more allocations to managers in the space. So thinking about this as a venture allocation and looking at funds that are dedicated to it and getting exposure that way. I think clients like will get some exposure through their financial institutions, but largely have to do it on their own if they're looking to do more bespoke or unique things. Or they'll work with service providers like, Bitwise or Grayscale to get exposure in a way that is de-risked to them, where they don't have to take the responsibility of custody and all of those kind of really complicated back-end questions that they just don't want to deal with and don't have the resources internally or expertise to deal with.
And I have something to add there. Yesterday, US Bank, which is one of our innovation partners here at Plug and Play, major corporate bank, I think 5th largest retail bank in the country, announced that its crypto custody service is now available to fund managers. So it's going to help with, storing private keys for Bitcoin and other crypto assets. And it's going to really open up the asset class a lot to more retail focused investors that want to do it with their familiar face of the bank that they're already banking at. That's a huge point here, because, in order for a lot of folks to, I guess, dive into the Web3 world or the crypto world, they have to get familiar with a lot of tools. And, oftentimes that's kind of a friction point. And so for now institutions to take advantage of a lot of the, the more mature thought about crypto, it's great for the entire industry. And I think we're going to see a lot of adoption and a lot of innovation because of that.
Anyone else want to weigh in on that?
I like to think about it as, sort of the analogy of what we saw with the advent of the cloud infrastructure. And, we're now in sort of decade number 3 of the cloud, and it's still producing significant value. It is still sort of touching all of our daily lives. And I saw a stat that there's the companies that are the cloud infrastructure providers in aggregate are about $600 billion in market cap. So it's been tremendous value for the workforce, for our lives, and for investors. And it wasn't too long ago, I mean, even 15 years ago, where there were a lot of companies in specific verticals like financial services or healthcare that would say, well, the cloud may not work here. We may not be comfortable with deploying our information and hosting it in the cloud. And so to Lisa's point on Aztec, can you think through like creative ways of solving for those, right? And so there was the private cloud or the hybrid cloud, and I think that blockchain will sort of go through that same iteration. But sort of if you look at sort of the way that secular shift transition across every vertical, with some verticals that were more conservative, more sensitive, taking a little bit longer, it's safe to say that we may see something similar. But the fact that we already have banks, leaning into areas of the blockchain, I think bodes very well that there'll be just massive institutional adoption over time.
Yeah, I just want to add that from my vantage point as an investor, I've seen an increasing number of pitches of not established banks, but like banks that are actually or companies that are attempting to get banking charters and say like Wyoming, right? That have either built their own custody solutions or are already utilizing like ones that are on the market. And so that's also just been fascinating to watch, like this proliferation of like people that said, okay, well, like the traditional banks won't do this yet, or maybe they won't do it quickly enough, and that's filling the gap. But this is very fascinating because I've been doing this for years and years, and back in 2018 and 2019, when we were doing crypto hedge funds at Iconic, we couldn't even convince more than 2 banks to like work with the funds, right? So and for years that was just the status quo, and we just had to accept it. And so there's just been a massive change. I will say I have heard feedback that there's still a little bit of pushback on founders who are trying to start blockchain or crypto themed businesses or bank accounts, as it will, on the business side of large banks. And so I think it's good that there's more adoption, but I still think that culturally it's very new. And, yeah. So I spoke with a founder who was having issues setting up a bank account because he was telling the bank that it was for his crypto business and they weren't interested in stewarding the assets. So it's very much an ebb and flow, and I love kind of seeing the evolution, but I'm very happy. Yeah.
Why don't we go to the VC perspective, VC early stage, seed stage perspective, and then we're going to go to a question, which is more from the individual perspective. Nancy, did you want to step in?
Yeah, sure. I mean, I also wanted to add, I mean, what Dylan was saying last is interesting too, because I think, COVID has also played this role in, accelerating digital adoption overall, but also just economic disruption from the pandemic that I think has probably served as a tailwind for the more of these more people leaning into crypto. And I mean that in combination with just the increased competition that you're seeing of the digital banks and traditional intermediaries that are that don't want to be disrupted. And as businesses have gained traction, people have been responding to that. And from our perspective and the investments that we've made, we've really been looking at the use cases of crypto and what is the value in the use case versus being attracted more to a protocol. And as we're seeing now, there are compelling use cases in capital markets that are being introduced. And one of our investments is Figure, which the provenance is their blockchain protocol, and really this use case of securitizing loans that they have been able to do using blockchain, and are expanding into other financial services as well, payments, exchanges, lending, and overall this these founders building businesses that are streamlining financial processes, either due to a lack of trust in the current methods or regulation, and blockchain serving as a way to automate, lower costs, and increase access for people to invest as well.
Daniela, did you want to add anything to that from the developer perspective?
So from the grants and developer perspective, the landscape has been super interesting, because in the early days, we were funding a lot of really low level infrastructure. So people saying, we're building data indexers, we're building RPC endpoints, we're building oracles, right? Like data oracles or AMMs. And then what we're seeing now in terms of the projects that are coming through are people saying, we're building NFT marketplaces. We're building, reforestation projects that are using oracles to track your, trees inside the Colombian rainforest, and then that becomes an NFT that you could verify something. So we're seeing a lot of the application of this technology actually happening, and that app layer sort of development is something that's pretty new. Obviously, Near protocol is a much newer chain than everything. We might be the newest on the block. And so everything's also on our stages, but we did see a massive shift from infrastructure and DeFi into consumer layer applications for the development of projects coming through. And to me, that's really exciting, because obviously I still think that infrastructure is super cool. So that's what I've been doing for a long time. But it was exciting to see all these entrepreneurs having real world use cases for what they were then going to do with blockchain tech. So, someone was using supply chain to trace, ingredients coming from somewhere, and just a lot of really interesting applications that like lets us see what you can do with the technology.
Stacie, I chime in if so.
Of
I think
course.
that it's a very interesting time to be an investor in this space because everything's moving so quickly. And we looked at the payments, sort of value chain, and we made several investments there, and so that's the first place where we started to really dig in and see where within the payments infrastructure that we want to start sort of finding the blockchain apps or teams that we wanted to back. And like we've seen the form factors within electronic payments shift dramatically over time, from like the initial credit card to the debit card to the prepaid debit card, because back when, in the early 2000s, like you couldn't stick cash into the computer to buy on Amazon.com. So if you were underbanked, you needed a way to figure it out, and that was the prepaid debit card. To the mobile form factor, right? So it's shifted, but on top of like the form factor shifting, the distribution model needed to shift and the monetization model needed to shift. And that's important for investors because we need to understand, how are you going to get it to the hands of your customers? How are you going to monetize that? Is the margin profile and unit economics going to be attractive enough for you to build a sustainable company? And so we're kind of used to seeing that shift in payments, but the kind of accelerated rate of change that we're seeing in blockchain is probably unprecedented, right? You're seeing from like the way that it went from sort of different currencies to stable currencies to NFTs, all these DApps that are coming out. It's really exciting, but it's also like if you truly believe that blockchain will be the future of, for example, payments, like what will be the form factor, what will be the distribution model, and then how will they monetize that? And so that's what we're thinking through a lot. And we're kind of picking sectors that we feel are very large, and so it won't be maybe a winner take all type of market, and that are very infrastructure oriented. So we've made an investment in B2B payments because we still feel that's a very large, business to business payments is a very large segment of the payments market, still very inefficient. We looked at real estate as well, and so we made an investment there, and we'll keep on looking for those very large markets where we feel are inefficient and where we believe we can sort of apply what we've seen in payments into those sectors.
So let's get into the individual investor. And I'm sure you each get asked this. I know I get asked it all the time, but for those who are interested in, I'm going to put like the air quotes, investing in the space, what would you tell them? And so the question we have here is about what type of asset allocation should there be in the short, mid, and long term? And I want to preface our responses by saying we are not providing financial advice, so please don't construe it as such. And just from my perspective, I would say that it's really hard to know what is an appropriate investment for an individual when you don't know their situation. So I think we could answer the question by talking about some of the considerations that might go into one's calculus when it comes to potentially investing in this space. And we've talked so far about use cases, rate of change, form factor, distribution model. What other things should be considered for somebody very new to this space who wants exposure?
I can repeat something that Vitalik Buterin, who's the co-founder of Ethereum, mentioned early on. He said, don't invest any money you can't afford to lose because crypto is really, really volatile. So that's been my personal mantra. And, every time that I buy something in crypto, I just put it in there and see how it does. But you really have to be, I remember him talking, he was like, please don't mortgage your homes or use your college funds. Like, that's not it. It's more about entering the space. And I personally like to invest in projects that I think are cool. So I look at the technology and I think through my personal perspectives on whether the work they're doing could be innovative or transformative. And that's how I've been doing it. There are other people with other theses who have also had success in more of a probably Vegas style approach to some of this. But for me, you know, I do angel investing as well. And for me, it really comes down to, do I think that the team is strong, that the technology is good, and that it can have an impact moving forward? And that's how I go about it.
Yeah, I think I want to just echo that. So, you know, at a prior job, we had done research into the correct allocation into crypto for a family office or a wealthy, a privately wealthy individual. And I think it was 1% to 2%, but that might have changed that thinking. And so I guess my feeling is that, you know, as an investor, I think, to be totally honest, the team comes above all else and the total addressable market, but mostly just the team, because crypto is so early that teams pivot all of the time, and the technology actually changes so quickly that you need a team that's actually much more agile and highly educated, both in crypto and in the vertical that they're attempting to dominate. And so I think technology is very important to consider, but I think it's always a founder bet in crypto, because this is so early and it's all about moving very, very quickly and changing very quickly and being okay with that. So that's just, that's much, and that's not advice. That's just how kind of my philosophy goes.
And what should investors avoid? So there are sometimes token drops. You'll see celebrities making endorsements. I mean, there's so much misinformation out there. To those who are watching, what would you recommend they avoid?
So
I think most people should not be investing in things that they haven't done their research on. So I'd say for like the vast majority of people, Bitcoin and Ethereum, I think, are like the two that you should really spend any actual allocation on. And then beyond that, it's like really play money. So I think, you know, when you put money into this space, like think about it in terms of the long-term time horizon. Don't try to time it. I just feel like I see people getting burned and stressed, and it's like really not worth the payout when they do that. And so rather than kind of spinning your cycles and thinking like you can catch like the next thing and cash out before, you know, like flip it or whatever, I think just think about it in a long-term time horizon. This is going to play out over many years. And like for the vast majority of people, if you're not in this space and really watching it closely and like spending a lot of time on it, then like anything you do beyond kind of the top crypto assets is probably just play money, and you should treat it as such.
Yeah, I want to just add to that. I think this whole notion of speculation and how you know, crypto has attracted a lot of people who are speculating, and to ask, you know, where is the value coming from? Is the value coming from exchanging it, or does the value come from use of it? And you know, I think generally this. There have been a lot of, as a result, you know, a lot of people have profited off of this speculation as well. And so I would caution individuals in that way. I agree with the comments around the team as well. And in one case, I mentioned, you know, what's the use case? I think there's also another scenario, and you know, maybe there is a crypto network that doesn't have a use case, but it has a significant user base with future applications. And so looking at, we're invested in a crypto network with, you know, 25 million users on that, and they're monetizing through advertising right now. But you can think of they've a vision and future applications for that. And so, you know, thinking through what is the value that where is that coming from when you're thinking about making the investment.
Yeah, and something else that I want to mention actually is I had a talk with the head of blockchain research at Bridgewater, and he pointed out that certain, you know, chains that cannot be mentioned are engaging in some gray market manipulation. And so what you should look at is go to CoinMarketCap, look at the total circulating supply for something, see whether it's like a large percentage of supply or whether, there's like 1% or 2% of the overall token supply in the market. Look at details like the token distribution among people to see whether it's all insiders in a team or whether it's actually spread across a community. That will give you like a good idea into like how that token distribution is happening, which is sort of a version of doing like investment research in the crypto space. So I think looking for those details and that information and doing your research from that side is also important, because that does exist and has happened. And then the other thing is be really careful about who you use as your wallet, because there's black market copies of everything. Like for a while, there was like a black market MetaMask around that if you didn't download it directly from their website for the right as the right browser, it took you somewhere else, took all your keys and all your money that was in there. So you had to make sure to download the right one. For like Near Wallet, we tell everyone to use like wallet.near.org, which is the one that the foundation runs a direct point in, so that people can make sure that they're at least using the right vehicle, so that it's not something that like happens to confuse some early users. So those are important parts to research, and just make sure that you're de-risking that portion as much as possible. And as some of the fellow panelists mentioned earlier, there's also like institutions that handle crypto custody, and they help for de-risking some of those things as well.
So we are going to move on to some additional questions. We have a question from Carlos Saavedra. What advice can you give to a founder preparing to fundraise for a blockchain company at the pre-seed stage? Who'd like to take that?
I'm happy to start. I think that so some of the comments were shared by Dylan. It's going to be really highlight the team, right? Yourself as the founder, but the rest of the team. How you complement yourself. Whether you have the domain expertise for the sector you're going to go after, or what experience you have in and around blockchain. That's going to be important. Two is think through sort of the application layer, right? Assuming it's not an infrastructure play, like what is the use case? Is there a real use case there? And this is sort of a little tougher when it's pre-seed and when it's crypto, but any sort of early validation points, whether it's because you are you tried the existing model and it failed you in this way, or because you had some sort of potential users give you feedback, or have that story ready. I think that's very, very important. And then everything else is sort of like, if we believe that this can work, can the product actually be competitive in the marketplace? Is the market big enough to make it very attractive for sort of an early stage VC investor? Like all those things will follow. But I think, sort of that first initial why us and why now, I think is very, very critical at the pre-seed.
I was going to add to that. I think that's a very important question to always be answering, as it were. But I think just practical advice would be to sign up for hackathons, try and win as many as you can, and then also to try and get into an incubator or find some sort of way into like a network of that a lot of investors like frequent. So, or like, if a lot of investors are mentors at, a certain a certain incubator or something, or launch pad, then go there and just try and meet as many people as you can. And I would also caution you to always be honest. And, if you're talking to other investors, say so, but don't say that anyone's committed that hasn't, et cetera, because that's always like a red flag. Just don't get overexcited, basically.
So
Great.
yeah, from the grant side, we fund a lot of really early, like pre-seed projects that haven't actually gone through their first round. So they get the initial grant, they start building, things like that. And then we actually share their DAX with our VC network, specifically for the near critical eco funds and all the VCs that have been part of our ecosystem, things like that. And feedback that we've gotten a lot is actually like VCs even for the seed stage, they'd like to see some sort of MVP. They'd like to see that like you can build something on crypto, that you understand the technology stack, that you got something to work. And then they're much more sort of likely to jump in. We've had a lot of projects kind of come in and say like, they told us to build something first. It's like, yeah, that's a good idea. So.
Yeah, and I just want to add one more point to that, which I think gets overlooked sometimes, but since I started looking at this in 2017, the question of like, why do you need blockchain? Like, make that very, very clear, because there are actually, surprisingly, a lot of companies, blockchain companies that are being started that, you might not even need blockchain in order to deliver that solution. And so being able to really communicate, what blockchain unlocks in terms of your business and why it's not possible otherwise. And I think is very, very important, regardless of the stage that you're at.
Let's move on to global and cross-border developments in blockchain and crypto. What are some of the exciting things we're seeing there in terms of use cases?
I think the biggest one has always been remittances, and whether or not that was done in a regulated way, right? I mean, so I think that that's going to remain. I think that there's just, there's been a lot of different developments, and as banks kind of adopt these technologies, like, we're just going to see more and more innovation. But yeah, I think that those are like the two kind of important things I'd highlight. So, yeah.
I think the coolest innovation is that most of these teams are completely global, and that's a really unique aspect of crypto that like my team is London based, right, technically, but we have folks in India, Russia, Poland, UK, US, and and we like can work really well together across time zones, across cultures, and that's representative of a lot of teams in crypto. And so I think that this space just has like a global mindset from the outset. It's just like completely global from the beginning, and like attracts people that have familiarity in a lot of different cultural contexts. And so the kinds of companies that you'll see created are almost like global from day one, which is super unique because most startups are pitching for like a particular demographic of a particular country.
Yeah, and I'll add, so, I mean, just in investing, being able to invest across borders is very interesting. So, I mean, we have a portfolio company that they are focused on tokenizing infrastructure to give people access to be able to invest in infrastructure projects with smaller check sizes. And you can imagine that there can be a cross-border element to that, as well as another company in our portfolio that's focused on the secondary trading for illiquid real estate assets. And again, automating this transaction, making it more seamless and allowing for, giving greater access to investing across borders.
And I know Dylan could probably lend some examples here as well, but one of the topics that we haven't really discussed yet is central bank digital currencies and what that's doing for a lot of cross-border payment movement. So with the advent of a lot of interoperability layers and solutions, atomic swaps now it's going to give a lot more countries access to be, a player in the global financial system. So, for example, if you're trying to, let's say, trade between Brazil and Nigeria, which let's say isn't a very common trade route, you don't have to go from, Brazilian reals to USD, then to Nigerian naira. You can do it atomically across chain. So that's kind of a really cool use case that's being discussed a lot. And then financial inclusion, right? And a lot of these countries that are exploring CBDCs are doing so for purposes of enabling a large part of the population that maybe don't have access to commercial banking or don't have the financial means to kind of be involved in the system and be included. And so that's one of the, I think, really cool advents in crypto, and one of the trends that is going to empower a lot of folks in places that maybe there's rampant inflation, or there's governments that aren't the best of actors. And so really exciting to see kind of in the developing markets what's happening with crypto and the technology behind it.
Let's move on to concerns about energy. So there's a lot of talk about energy consumption when it comes to proof of work versus proof of stake. What are some of the thoughts about climate neutrality in this space, energy consumption, and what's going to start to happen over the next few years in terms of proof of stake?
I've already seen some early stage projects that claim to be like buying carbon credits and investing, like some DeFi protocols investing some of their ancillary income into like environmental efforts. So I think that if that issue is being addressed, it seems to be being addressed from the ground up. I know the Ethereum Foundation did issue research, or no, that might be wrong. But just, I don't really know of any larger players or like larger foundations that have really kind of come out and tried to address the problem, other than maybe a handful of actors. So I don't know if anyone else wants to speak on this, but.
I read somewhere, I think, a recent report talking about how EIP 1559, which is the Ethereum Improvement Protocol, moving to a different kind of on-chain governance model, has saved users somewhere, I think, around $100,000 just on Coinbase alone in gas fees. And these are typically like cents, right? So that's a lot of gas fees. And so I think with proof of stake, we're seeing a shift that is getting people excited about what we could do in terms of energy consumption, reducing that, and reducing a lot of the work that the validators and miners need to do.
So both Ethereum and Bitcoin currently operate on a consensus mechanism called proof of work. However, Ethereum's roadmap for ETH 2.0 does establish a transition to proof of stake. So I think the community in Ethereum is very conscious of the energy consumption that does go into this, and is making active efforts to move in that direction. Because they're already so established, it does take some time to do this. So the estimates for this keep blowing. We don't know if it's 6 months, a year, 2 years. No one really knows what the deadline is, but ETH 2.0 is coming. You'll hear that a lot. If you Google it, you'll hear that too. But it's definitely something that matters, that people are thinking about. From what I've heard, proof of stake is about 99% more energy efficient than proof of work. So it certainly goes a long way to really assuage those concerns regarding the environmental impact of this technology. Part of it is that it grew so fast to a place that no one really expected. So a lot of things that were much smaller at a small scale become, something concerning at the scale that we're starting to reach right now. Near Protocol started as proof of stake from the very beginning. And about a year ago, we set up a partnership with South Pole Global, which is an environmental firm that does this kind of carbon credit offsetting. They're doing all sorts of emission offsetting. so that Near can be, or Near is a climate neutral blockchain. And so projects that go on top of that, or NFTs that get issued, are like green NFTs. And it does have that, certification around it. It really comes down to the people that are building things or people that are buying things, whether that matters to you or not. Matters to me, but it's like a personal decision that, firms and companies and people will have to make when they're working with blockchain technology.
Great. Now, one of the major risks in this space has to do with privacy and security. How do we keep our information safe? How do we prevent somebody from stealing our keys? We've seen what's happened with certain exchanges, and it might be government intervention like we saw with Binance. I'd love to get your thoughts on what are some things we're seeing in development now that will provide more robust security and privacy.
Yeah, I can kick that off, given that's what I'm spending my time on. So I think folks recognize that this is going to be an important part of what we need to build. And it's like a really hard thing to go from completely transparent by default to even offering privacy, let alone privacy by default. But I think that, there's been, to Danny's point, like years of infrastructure building, and Aztec is a part of that. The company started technically, I guess, in like late 2017, but really in 2018, and like has been basically in R&D mode, building like zero knowledge rollups that enable people to have more control over their information. So all of the transactions are private and encrypted, and putting more power back in the hands of the user, which is where like the world needs to go. And so I think that there are other teams like us that are really privacy, mindful of privacy, I guess. So that might include wallets, that might include like the protocols themselves, that might include like protocols that are starting from, layer one being, an alternative to Ethereum or Near, where developers can build applications that have privacy as a default. And so I think that this whole ecosystem is nascent but growing, and crypto tends to work in these like kind of thematic eras, where back in 2017, when CryptoKitties broke Ethereum, everyone's like, scalability is the issue, and then like everyone raced to solve scalability, and then it became like interoperability is the issue, and like all these chains need to talk to each other, and then people went and solved that problem. And then now people are talking about how are we going to offer privacy? And like, I don't think that that's caught on to the same extent as like scalability and interoperability, but there's like, especially now with kind of, governments getting more involved, like people want to backlash against big tech. People are like having this conversation because it's coming up in their everyday lives, and it's something that they are seeing in the headlines. And so I think that rallying call will be there, once there's that sense of like urgency. And there's these things just like take a long time to build, but I'll say like they've been in building mode for like the past couple of years, and now are like almost ready for prime time. So I think this is kind of like that interim period where things are being built, but like once they're finally shipped and people have the choice between, do I want everything on chain being completely transparent and public, or do I want to like pay a little extra for privacy, or maybe not even have to pay extra and just have privacy? I think once people have that choice, they will, we'll see where the consumers go. But my sense is that like more people will opt into privacy going forward, particularly as they see the risks of being completely transparent affecting them.
Great, thank you. Anybody else want to contribute on that one? I think it's interesting too to note for those watching the difference between different types of privacy. So there's anonymity and then there's pseudonymity. And I think oftentimes people assume that with a Bitcoin network that it's entirely anonymous, and it's not. And so that's enabled regulators to really understand patterns when it comes to investing in transactions. And the FBI has been a frequent user of tracking Bitcoin. So it's been really interesting. So let's get to one of the most exciting pieces, and that's monetization. So what are we seeing in terms of monetization of the blockchain through different types of crypto, and what are the use cases we're seeing there?
I mean, we'd be remiss to not talk about NFTs after the summer that NFTs had. But I think like generally people are seeing or consumers are showing a willingness to pay for digital assets that go beyond just like the cryptocurrencies themselves. And NFTs can be seen as kind of like collector's items, as part of your like identity online. It's a mechanism of like actually earning an income for folks that are using it in games like Axie Infinity, which just raised a massive round from Andreessen, where people are actually like getting paid a better wage than minimum wage in their country for like playing this NFT game online. So I think that's going to be like a huge and continued emphasis because of the spike that we saw in activity this summer. There's like now this flood of startups that are building businesses around this. The most obvious is taking like a Web 2 model and then bringing it to Web 3. And that's what OpenSea has done with like creating a marketplace for people to buy NFTs. But I think more exciting models are going to be like the blank to earn, which people are very excited about. Like Axie Infinity kind of created the play to earn model. People are talking about the like learn to earn model and the participate to earn model. And I think the next kind of space that I think will be an interesting one to watch is DAOs. So you're seeing the decentralization. DAOs are decentralized autonomous organizations. So basically like having a group of people coordinate and be incentivized to work towards a common goal. And that is in some cases replacing companies for some of these protocols that are running as DAOs. But then you're also seeing DAOs for like very specific purposes. Like I'm part of a DAO that's literally just built to collectively buy really expensive NFTs that we can't afford individually, called Nouns. And so I like contributed to that DAO and like, you know, paid a membership fee essentially. And that DAO now doesn't have to go and raise venture capital. They can just like raise with this common mission from participants that want to be a part of it, and then just go march towards that common mission. So I think that's going to be a really interesting, not only like kind of payment mechanism or monetization, but also like potentially a funding mechanism, because the company like gets to product market fit by raising for the, you know, mission that they are setting out for.
I think both Dylan and Max touched on this a little bit, but I think the decentralized financial services aspect of this is it's interesting because it's both fulfilling and closing the gaps in financial inclusion for emerging markets, but it's also rethinking where should those economics flow to. And so we've seen models where the individuals that hold the tokens are the ones actually financing loans for people in sub-Saharan Africa, for example, or perhaps you can replace the bank and finance U.S. mortgages through people buying the tokens, which is another company that we've invested in. And so the economics are flowing. Number one, you take a lot of costs out of the system. And so the end consumer is probably getting a better interest rate or a better product at a lower price. But also the people who are financing through the token sale are actually accruing the cash flow. So I think it's just rethinking the entire economic model is very interesting. And then, back to sort of democratizing just the economics to the masses. I mean, there was a question on the chat room here, why El Salvador adopted, Bitcoin as legal tender. I mean, there's probably a lot of reasons why, but one of the big reasons that the president has stated specifically is cross-border remittances, right? It's like 70% or so of the people there receive some form of remittance from mostly the U.S. And he understands that a lot of that is leaving through fees, and then when it gets to El Salvador, it has to be cashed out, and you can't tax fiat. And so I think that for a lot of reasons, it's just rethinking how can you kind of either increase the pie or cut costs from the current legacy infrastructure and split it in different ways.
Yeah, I just wanted to kind of go back to the discussion about DAOs and about the future of labor and play to earn and what's going on now in Southeast Asia. But I think my friend Jason Cam of Bullies Ventures, but known on Twitter as Maple Leaf Cap, on Sunday tweeted, being a core part of an emerging DAO today could be similar to being employee number 1 through 10 of FANG 12 to 25 years ago. And I just totally agree with that. And I just think that, I have friends that like their full-time jobs or that they manage DAOs and they're in different DAOs, and like the DAOs are actually subsidizing their lives, and there is labor, but it's not your standard 9 to 5. And I think we've slowly seen a lot of deterioration actually in the normal corporate structure, right? I mean, 1 out of 2, so 50% of American laborers are actually technically not full-time employees. So 40-something% are contract workers or 1099s, or they own small businesses that get paid. And so corporations, the share of Americans that have actually worked for corporations has been declining since 1980 steadily every single year. I mean, there's so much research that more and more people are actually opting out of longer hours, especially millennials, longer hours and more pay in favor of their time. And so there's this concept that I think where I think generationally, like, maybe not millennials, maybe not my generation, but the generation that is coming and growing, I think more of them will work for DAOs than for corporations, or they will work for small businesses. And I could have this discussion for like days. I mean, I've like done so much research. So that's probably the most exciting part of crypto right now to me. But yeah.
So on that note with DAOs, that leads us into developing business models. So we're starting to see more disruption in the space. I remember when I first got into the blockchain space in 2016, I was excited about it transforming the insurance industry, which it has, but there's so much more it can do. So what exciting developments are we seeing with business models right now?
Well, one really interesting thing is that now, well, almost ventures being disrupted, right? Like, now, I heard, well, I'm not going to say who, but a very famous investor who just left a big crypto fund, instead of raising for his own fund, decided to start a venture DAO. And so now now I'm seeing that in deals, there's like DAOs that are doing more VC and they're more active as VCs or angels. And so it almost feels like there's a splintering in investing where you're going from very large, like institutionalized almost VC firms that are competing with extremely specialized smaller cap, but still name brand in their own right / indie labels. It's almost like you can kind of see the patterns that happened in like art and film and music, so like I got like my favorite artists actually don't have labels, right? Like aren't on a music label, I mean, right? So like my favorite singers and rappers and musicians, right? So I think it's just it's like decentralization is actually affecting everything, and you're seeing a reversion back to the mean of like these more independent type people that are able to just make a living.
Yeah, I think Syndicate DAO is a really good example of that, because it came from IDEO Collabs, which is a pretty well-established Silicon Valley firm. And then they went out and created that, and they were the very first ones to actually say, like, even though we're a traditional VC, we see pseudonymous DAO investing as something that could be interesting, and they're willing to invest in anonymous founders with like a completely different set of parameters that, seemed out of the question earlier. A lot of VCs, for example, now are also taking token allocations, which back in 2017 was unheard of. It was like either it's an equity round or like we're not in it. And now it's kind of become the opposite. So for example, we started Satori and we're doing like an equity round. He's like, oh, we're so like, no, this is not a token. They're like, but you're in crypto. I'm like, yeah, that's a thing. And so it's almost an inversion to that model. Also, we've seen the inversion of the model of ownership through NFTs, which is that the creators now own the assets and can go out and do something with them, whether they choose to put it on a platform or partner in some way to then create a new channel for their creative output is really cool. So we heard from artists back in Miami when we had an exhibit in April. We heard from artists who had lost a lot of their original work during the pandemic and then found NFTs as a completely new way to start you know, a new revenue model for themselves. As Lisa mentioned earlier, there's been a huge influx of capital coming through the NFT space. I think pretty recently, OpenSea said that their all-time sales had come to like $2.4 billion, which is not bad for a tiny startup that, you know, has only existed for maybe a handful of years. So it really shows how quickly the space is accelerating.
Yeah, and I think actually what's challenging here is the business model piece, because you can, you know, to some extent predict, you know, how the technology will continue to improve. But I think it's harder to predict really how society is going to behave, and how that value is going to be created and captured from blockchain technology. And it's interesting. So Daniela mentioning IDEO Collab, because they actually, you know, after like ideating around, you know, business models for blockchain, decided to, you know, start a venture studio where to be more like firsthand building some of these businesses when they came across an interesting protocol project, for example. And so I think there's actually like a lot of room for innovation on the business model side in particular, that you know, I think it's still early days for that, and it requires not just an understanding of the technical side of blockchain, but you know, human behavior. And you know, I think one thing that you're seeing today now is in these marketplace models, the challenge of getting a critical mass of users to use the technology. And you're seeing, you know, companies address this in different ways. So, you know, Figure merged with a mortgage a loan company, which basically they originated $25 billion in loans last year. And there, you know, the idea is to be able to, you know, add that mass of loan originations to the Provenance blockchain. And so I think that's going to be the challenge, is how do you solve the user marketplace model and create a business around that, aside from the technology.
And I have something to add. I think we talked about, Lisa spoke about play to earn, learn to earn, all these different kind of models. One of the models that is most fascinating to me is this decentralized ownership for service providers. So you can, a great example of that is Helium Network, and being able to host a miner that also doubles as a Wi-Fi provider through low power wide range networks. It's really interesting that, you know, we can now, as users, own shares in that company, be operators, and earn income at the same time. And I think we see with Helium Network, we're seeing that with Filecoin and the proof of storage. You can even have decentralized identity solutions that an entire kind of mesh network composes and kind of provides the infrastructure for. So the idea of giving, you know, retail investors or, you know, folks that want to be involved in the crypto ecosystem, you know, a piece of that infrastructure or a piece of that company to be able to provide services is a really interesting model as well, because that is in itself a network effect. And so I think that's another really interesting business model within crypto.
Great, and we have another question, actually two questions. The same person from, it looks like from Angel Gomez. How do you think about effective rebalancing strategies for pure cryptocurrency investments? Any takers on that? If not, I'll answer it. So again, no financial advice is being provided, but I would look at it from a risk perspective. And so if you look at the oldest of the cryptos, which is Bitcoin, that's probably less risky. It doesn't mean that it's not volatile, because it is, as we've seen today. The newer cryptos that are probably less proven, have fewer use cases and less security, are going to be more risky. So if you're thinking about some type of crypto asset allocation, and again, with only money that you're willing to lose, you need to really think about what you want that pool of funds to do, right? So you want to be able to have some funds so that you can continue to invest in that space. So you're going to have some allocation, most likely to Bitcoin and Ethereum. But if you want to get more alpha, if you want to take it to the moon, you're going to want to invest in newer spaces too. So as you're thinking about rebalancing, if all of a sudden there's a day like today where, you know, it went up for like a 5-month record, you could look at reallocating part of your portfolio to the newer coins, for example, and taking on a little bit more risk. But again, no financial advice there. And the second question, how do you think about blockchain platforms that enable other opportunities like smart contracts? Who wants to start with that one?
I can start with that one. I think that only blockchain platforms that enable smart contracts are like really like worthwhile to look at in the future. In terms of platforms that don't enable smart contracts, you have Bitcoin. That's it. That's all you need. You don't need anything else. It has distribution stability, whatever. So innovation will come through smart contract platforms. If something doesn't have that, we call them zombie chains, vaporware chains, or ghost chains. And so obviously I'm partial in the sense that I work with a lot of developers. And so that is certainly what I'm looking for. But, you know, I think that ultimately what is really cool is if you have a chain that doesn't have smart contracts enabled, the only application it has is cryptocurrency. That is the only use case it can have, versus blockchains that have smart contract enabled can then develop what's considered these decentralized applications, sort of like dApps. So it's like the difference between having like one of the very first phones that like made phone calls and sent, you know, that was cool. And then you had new phones that came out that like not only gave you text messages, but gave you apps. And now we do all these other things. So when you think about the evolution of technology, smart contracts and the types of smart contracts and what those smart contracts can do really matters, because that's where the innovation is happening.
Thank you, Daniela. Anybody else want to weigh in on that? Okay, so we have about 10 more. Oh, sorry, Lisa, go ahead.
No, I was going to say generally you want to follow where the developers go. And Electric Capital does a really good report every year on like where there's more developer activity and appetite, and they go like really deep on GitHub, so you don't have to. I'll put the link in the chat. They haven't released 2021, and I'm sure there will be changes from 2020, but I'll share the 2020 developer report. But I think generally you want to go where the developers are.
Very true. Great point. Ah, there it is. I see it in the chat. So we have about 9 minutes left, and I think it would be helpful to provide our perspectives about where things are going to go in both the blockchain and crypto space. And again, they're not necessarily one and the same, right? You have crypto on a blockchain, but I think for the blockchain piece, how do we see blockchain transforming the way that governments work, that societies interact? Because we're seeing some movement there. And then the second part with the crypto space, what developments do we expect over the next 5 to 10 years, particularly with DAOs? Who wants to start with the blockchain piece?
You know, I can start with some of the things that we're particularly excited as a firm. And when you speak about, you know, sort of government society, you know, the one that sort of comes to mind that we've been doing some work on is just sort of like voting, right? And how in certain, governments throughout the world, like it's tough to get a democratic process going. And there are so many sort of infrastructure issues that still sort of need to be kind of worked on. Like how would you enable the registration? How will you verify ID? I think that those two are probably significant, let's call it unicorn companies in the making that can solve for that. But it's there, right? And I think that it's possible. So that's one of the things that we looked at. I think if you double click on those sort of elements that are necessary for just to look at politics, it's identity itself. Like it just could go off to so many offshoots. Who owns that data in a decentralized model? Technically you and I, the user. How do you monetize that if there isn't a sort of intermediary that's sort of charging for access to that data as we have in current models? And so that's that's something we're doing a lot of work on as well. I think that in general, the way we're thinking through is, okay, we know where we ought to be in some sense, right, in different industries, but there are, I think it was Lisa who said, like, every week or month there's like an issue that comes out. It's like, oh, it's not secure enough, and then they rush to fix that, and then, oh, but it's not interoperable. And we keep on like sort of blocking and tackling these issues. Like, the gas fees are still a problem, right? The volatility is still a problem because, definitely merchants don't want to hold on to something that's volatile. I mean, they don't mind accepting that, form of payments in crypto if the consumers are willing to pay for it, except that it's volatile. But we now have sort of some solutions, partial solutions to that. I think as we continue to work on the technology continues to resolve these issues, you're going to see more and more applications. And that's what's exciting about the space, right? It's that every single time there's a gap, it feels like developers rush to close that gap.
Yeah. Well, I'm just beyond my comments about labor. I also think that, well, I hope, and this was always the case, that to tag on what Roman is saying, is that there will be less fraud. And that's kind of, that society could be more equitable, but I'm just speaking in general terms. So, yeah.
On the government side, I think they'll probably get better at figuring out how to tax this stuff. And hopefully there's software that makes it easier rather than us just classifying all of our transactions. Obviously, they have a vested interest in that. So I think that's probably where their time and attention will go. On the other side of what kind of government involvement, obviously, there's been a lot of conversations about how to regulate. One of the things that I think is potentially encouraging is, one, the crypto community is figuring out how to organize itself and educate regulators and building allies and all of that. But I think the other thing that's interesting is as fintechs, institutions, organizations that are more familiar with the regulatory regime are coming into the DeFi space and doing things like, I think someone called it like a DeFi mullet, like fintech on the front, DeFi in the back, and like kind of masking the fact that they're doing DeFi. So I think as more and more folks are doing that, financial services firms included, that will be an ally in those conversations. So hopefully, like, the government will, be, encouraged by those institutions coming in rather than encouraged to, regulate this space out of existence, which I think, there's folks on both ends of that spectrum.
I'm not certain of what, the government was going to do at the federal level, but I was in Wyoming 2 weeks ago running DAO Day, and I met with the regulators who actually wrote all the blockchain legislation. And, we had drinks and talked about what they're doing, and they're super excited. They're super open in terms of really hearing what are some of the use cases, what's happening, and really like wanting to be at the forefront. They also have internal, their own internal duels. So apparently I heard through the grapevine that the legislators in Wyoming told the legislators in Colorado that they were never going to catch up to where they are in DAOs. And Colorado was like, oh, hold on. And that started moving forward. I remember speaking with one of the legislators in, was the head of securities, I believe, the securities commissioner for Colorado. at one of our Ethereum events earlier this year. And this was really, really early on. She said, what could be really interesting? We said, would you look around, the legislation in DAO? She said, yeah, actually, I'll explore this. So I think that's very different from the conversations we were having, back when I was at Consensus, and it was like early 2018, and everyone was just sort of averse to looking at legislation related to blockchain. I think now it's actually shifted because it becomes more imperative to actually start interacting with the technology because it's not going to go away. So then I think, some of the early legislators are finding ways to actually make that something that can be beneficial towards their respective communities and states. And I'm excited to kind of continue to see how the legislation evolves. And there's been a couple of projects that I saw. I can't remember who did this recently, but there was a project that had essentially figured out how to let you open a Wyoming DAO in like 10 minutes, basically. I thought that was kind of cool that that also entrepreneurs were figuring out how to take that on. So.
Any final thoughts? We have about 2 minutes left, or final questions from the audience. Oh, here we go from an anonymous attendee. With increased regulatory pressure, big investors capturing most of DeFi's growth, governments thinking about CBDCs, and VCs entering the crypto space, is there still hope for the decentralization ideals envisioned by Satoshi and early crypto community? Do those matter anymore?
Of course they do, and I don't know that I agree that most of the gains in DeFi are being captured by big investors. I don't know how you would classify big investors. There are deals that I know of that have appreciated considerably that would not allow VCs and would only have angels and like DAOs. So there's like there's now more and more a divide. I don't think that the upside is being taken by big investors the way that question was framed at all. So.
So is it a consensus? Satoshi's values still matter? They still hold?
We'll see. I think it's still early to be, it's still a story that's being written in a lot of ways. I think that there are, decentralized protocols that are doing really well, and there are less decentralized protocols that are doing really well. And so I think it's a matter of like, where the developers, investors, users all spend their time. I think, a lot of the teams, even though it is a spectrum of like how decentralized protocol is, are at least like trying to address that in some way in like in the networks that they're building and in the communities that they're building. And at the very least, like I will say, no matter how like decentralized or centralized the actual infrastructure layer is, the communities for these ecosystems are like way more engaged and collaborative and building the future together than you would see in like kind of traditional Web 2 companies. So that spirit is still there. I think that it's still working itself out in terms of like where it falls in that spectrum, and it, time will tell in terms of which model is most successful.
I would just echo that and say that just in general right now in the VC landscape, founders have tremendous influence in who they choose as investors. It's shifted significantly in the last few years. There's tons of capital, and that's just not the issue anymore. Founders really want to work with people who share values, and I don't see anywhere else this more pronounced anywhere else other than blockchain. Like blockchain is like those founders like really do care about what they're building, and so to a certain extent, like maybe some investors are gonna sort of just be capital and do well just because for the sake of the investment. But I think in general that's shifting, and founders are gonna care.
Well, great. Thank you to our wonderful audience and to our brilliant panelists. This has been an incredible event just to hear the different perspectives. And I'm so grateful we have such talented Latino leaders in this space. So we're on Facebook Live. For those of you who are watching, this will be recorded, so you can forward it to somebody else, let them know about this charla, and look forward to seeing what happens next.
Awesome. Thank you, Stacie. And Alexa from our team is going to just share one final little Hispanic Heritage Foundation commercial. Alexa?
Yeah, hi. Thank you everyone for joining us today. It was a great charla. I just want to let you know what Stacie said, that it will be posted on our YouTube page. So please stay tuned for the link. And also we will be having future charlas and topics such as real estate and investing abroad. Hope to see everyone there. And on behalf of HHF, you are invited to tune into your local PBS station on Friday at 9 p.m. Eastern Time to watch our Hispanic Heritage Awards. Thank you all, and we look forward to being in touch.
Awesome. Thank you, Alexa, and thank you, Stacie. Thank you to all the panelists. This was awesome, super informative, and more to come.